everyone and welcome to HDFC Life presents live sessions in collaboration with ET Now, a series that features insightful conversation with top experts and the financial industry to enhance understanding and spark discussion about the importance of life insurance. In a constantly evolving and advancing world where every sector is undergoing some progression or transformation, the insurance sector is no different. The uncertainties we have faced in the past few years are enough to indicate the need to secure our and our loved ones' future. And thus understanding life insurance and its trends has become increasingly important. However, despite the essentiality of the life insurance, a Swiss Re Institute report has revealed that in 2023-24, penetration for life insurance in India is projected to be approximately 3% of the GDP. So, how can we help secure ourselves and our loved ones? What are some of the actions taken to ensure that the benefits of life insurance reaches everyone? With conversations around Insurance Awareness Day, ET Now in collaboration with HDFC Life are excited to introduce our latest initiative, Bridge the Gap towards a secure future. To guide us on our journey towards financial preparedness, we have with us today Mr. Suresh Badami, Deputy Managing Director, HDFC Life, to help us understand the category better and make informed decision. All right, Suresh, thank you so much for joining in today for this very important session. Let's understand the landscape of life insurance in the country. We being a very populous country, we've seen a lot of awareness and understanding regarding insurance coming up in people post-pandemic. But what is the current status now? In terms of being a sector player, a stakeholder, what are the steps that you are taking and where are the gaps exactly? If you could just highlight on that.
So Kavita, it's a very, very large industry. It's not that India has not been moving forward on insurance. Sure. In 2026, we would probably be the sixth largest, global player in terms of insurance industry. We have obviously covered a lot of lives. We would assume anywhere around 28 to 30% of the insurable population has been covered. But having said that, you typically look at life insurance in three ways. One is in terms of the protection gap, which effectively means that if there is a certain cover that the country needs or the people need, how much of that is actually getting covered through life insurance. So there, the numbers quote anywhere between 90% to 91% of protection gap.
Okay.
Right, which effectively means that if you need 100 rupees of cover, you will have anywhere between 10 to 13 rupees which is covered. The rest is not fully covered. The second is the way we normally track is as a percentage of the GDP, and we have always been ranging between 3 to 4% of the GDP there, which is also fairly low as compared to some of the other countries in terms of penetration. And third, of course, is in terms of the sum assured as a percentage of GDP. How do we do? Now, on those three aspects, it's not that we have not been, even on sum assured, we are at 85% as a percentage of GDP. Okay. But many of the evolved nations are multiple times. Sure. Right? Now, it's not a question of awareness. I don't think awareness is really so much of a problem in the life insurance industry. Okay. Because like you rightly pointed out, COVID brought a lot of awareness. The second thing is a lot of, the government schemes like the PMJJBY, the Prime Minister Jeevan Jyoti Bima Yojana, and many of these similar schemes have brought a lot of awareness right across the spectrum. So the real question is whether the awareness is leading to a lack of inertia in terms of actually buying life insurance. Okay. Right? Now, that is something which a lot of the companies are focusing on to say that how do we make sure that people look at life insurance as a product that they should have, whether it's in terms of the basic term product or whether it's in terms of a savings and investment product or whether they are looking at the long-term retirement monies that they need to save. So typically, we say that in life insurance, you need to look at the mortality, morbidity, as well as longevity cover. And those are the three aspects. Now, a lot of work has happened. I mean, to be fair, over the last many years, and I've been in the industry for almost 10 years plus, you have seen the whole industry evolve. A lot of it led by the regulator. Sure. Because a lot of product regulations have come in place where there's a lot more transparency, there's a lot more cap in terms of how the products are more suitable for the customer. There's a lot of focus on quality of business. There's a lot of focus in terms of how we are looking at claims and settlement because look, that's core to insurance, right? And I think a lot of this has led to a lot of awareness, one. Two, and in terms of adoption of insurance, right? And it has become easier for customers to access. There's a huge amount of distribution which has come in place. So if you look at it as an industry, there is a lot of evolution which has happened in terms of the products, in terms of the distribution, in terms of the servicing. And really the roadmap is well set for the future ahead.
Sure. So the industry is evolving, but then once you, when you talk about being good amount of awareness, is it the awareness for having life insurance, or it's the awareness about having the right kind of life insurance? Because life insurance actually should be the first step towards having a financial plan.
Let's step back a bit. I think if you were to look at the Indian customer, there is a lot of evolution in terms of just the overall financial literacy and the products that they are aware of.
Okay.
And you look at what's happening in India, really, there is a financialization of products in terms of savings. So while, the savings as a percentage of the overall income has maybe been peaked at the COVID time, but if you really look at it, the customer is getting more and more aware of what are the options available in terms of where they can invest. Right. And life insurance is one of the products. And clearly, when you look at your entire financial allocation, when you look at what product suite you should have to cover yourself, right, for your various financial requirements, life insurance plays a critical role. Right, and if I were to split the whole life insurance product into 3 basic categories, the first is the pure term cover, right? If something happens to you, your family is taken care of. That's an essential, right? And if I were to emphasize, that is something which everybody is aware of. It's still something which everybody needs to have the right cover. The issue is that people don't have the product. Many people have the cover, but they haven't really fully assessed whether they have the right amount of cover. Right. And there are nuances even to buying a term product, and I'll maybe probably touch upon it a little later. The second segment is in terms of the savings and investments, right, which is your goal-based products. How is it that you're saving? Are you looking for your child's education? Are you saving enough for your? And the third part is in terms of your retirement. See, and that's the longevity risk. Like if you stay, do you have enough money? And in India, there is a huge amount of changes which are happening in the socio-demographic culture. There are nuclear families, there are people living longer, the support systems, the health inflation. So there are many things which are coming into place. So really, when you retire at 60 or you retire a little earlier, given what's happening in the industry, do you have enough money saved to last you till you're 85, 90, right? So there are these 3 aspects of the mortality, and on the health, of course, the morbidity side, the savings and the investments, as well as the longevity side. Now, customers are aware, right? And they need, as per their life stage and their life cycle, where they are, everybody needs a different kind of a cover. The question is, are we able to get the right fit product? Right? Sure. So, it is not to say that, look, you need you're a millennial, so you don't need a life cover, or you're closer to retirement, you don't need a life cover. There are like, all insurance companies have anywhere between 30 to 55 products. There are products which cater to each of these requirements, and then we are able to go back and say, look, this is the right fit for you, right? So, but then again, you want to know whether you want to do it for child education. And there are people who would probably buy life insurance even for legacy planning, right? So, there are people who are looking.
So, you always have a goal-based requirement in a life insurance as well.
It is. In fact, frankly, anything you do in financial services has to be goal-based, right? Because you don't want to be led astray by any product because somebody is giving it to you. And I think we do a lot of work in terms of how do you look at the suitability of the product. And now a lot of regulations are also coming in, thanks to the regulator to say that, look, there has to be as little mis-sell as possible. You don't sell the wrong product to the customer. So there's a lot of work which is done in terms of actually analyzing the need. And then going back and assessing what they really require.
You mentioned protection gap in your first answer. So could you elaborate on that, and how can one actually figure out if they're also lacking in their coverage for life insurance?
So, broad rule of thumb, and all of us growing up as kids have always said that you need life insurance, and you'll find typically anybody coming in and telling you is to say that you need to protect your income. So let's say you're working. The earliest rule of thumb used to be, say, let's say you have 25 years of work left, and let's say something were to happen to you, your family will lose out on the income that you will earn over the rest of your working life. So are you really covered? So if something happens to you today, what you would have earned and provided and cared for your family, have you covered that goes to your family, right? But a normal rule of thumb is anywhere between 10 to 15 times of your annual income is something that you should have as a life cover.
What about the liabilities? How can one count in that?
Yeah, so that's typically the broad rule of thumb what you need to do. Now, really the question is whether you have assessed what are your lifestyle expenses, what are your liabilities in terms of what kind of loans that you need to cover, and whether you have enough insurance which covers all these aspects so that your family is protected in terms of anything happening to you, right? Now, there are multiple products in the market. So, one, of course, is the basic term product that I was talking about. That's where protection gap comes in. And to your question that if everybody needs, let's say, 100 rupees to cover all these liabilities as well as your insurance, as a country, we are very less protected, right? And that is something that we need to look at. The other aspect is there are loans which you have taken, and you want to make sure that if something happened to you, your house is not taken over because you're unable to repay the EMIs. There, what we look at are wraparound products, what is called credit life. So you take a credit and there is a life insurance wrap around that particular product. So if something happens to you, the insurance company takes care of the loan that has been given. So that protects you from the liability. The third, of course, is all these savings and investments, whether you want your child's education. So you have planned for a goal, right?
Yeah.
Now, have you covered all of that, like I have mentioned earlier? Those products are also available, and off late, earlier, the main focus used to be on term. But now there have been a lot of other solutions which are coming to the market. So for instance, there are these guaranteed products, savings products which are coming to the market. There are two things very different from life insurance from some of the other products, right? One, it kind of leads to long-term disciplined saving, right? And that's a critical difference. And second, they provide a life cover. So, you don't really look at IRR always. So that is one component. But what you also need to look at is there a sum assured? So in some sense, it's not right to compare maybe a mutual fund or a gold investment or a real estate investment with life insurance. And a lot of it plays out when you actually play claims in the market. Right? And I think that's something customers need to recognize. I've always said that it's more peace of mind if you buy life insurance, because you're rest assured.
Exactly.
The second bit is because it's long-term in nature, you stay, in some sense, in the product itself for a long period of time. And otherwise, what tends to happen is you're saving in a certain asset class. You want to suddenly buy a house or you want to make some investment. You break that. And then you invest again. In life insurance, it's more long-term.
Let's also focus on tier 2 and tier 3. Let's talk about the penetration over there, the kind of consumer base you think you're experiencing, and the kind of products which are in demand in these specific areas.
See, obviously the India story is very good, right? And I will break this whole
And the
question.
story is more growing up over there, tier 2, tier 3 towns.
It is true. And it's happening not just in life insurance, it's happening across products. The thing is, if you look at tier 1 from an insurance perspective, clearly very heavy competition, a huge amount of insurance awareness. There are online options for customers to buy. There are distributors, there are branches which are available. The tier 1, clearly there is no shortage of how life insurance awareness and access or affordability is there.
True.
As you get into tier 2, the affordability is increasing, the awareness is increasing, right? What insurance companies are doing are, one, expanding their branches. Two, they are looking at riding the branch expansion which is happening through the bank assurance players. Right? So what's happening is, as India grows, there are a lot of banks and NBFCs which are going into these geographies. And with those, you have access to all financial products at the regular branches. So that's a good way to expand in. So tier 2, tier 3, clearly customers are aware. They are looking at coverage, and frankly, COVID led to a little bit of a spike in terms of the awareness and that whole inertia that I was talking about people buying. So that has come into play. The preferences of the customer there are still a little different from tier 1. Right? They do look at what do you get out of the particular product. Is there a return of premium? If you put money in, do I get something back? Right? Even as a regular term. So we find that what's called a return of premium product has a little bit more. But again, some things are catching up very quickly. Right? We find that even in tier 2, tier 3, the amount of research that customers do in terms of buying a product before they buy is also increasing considerably. Right? We did one survey where we found that almost 44% of the customers actually go and research which life insurance product to buy before they actually go and buy. And they may finally buy it from a bank branch, or they may finally buy it from a financial consultant or an agent, right? But they will still go back and research. So really, because they are now open to e-commerce, those trends are coming in. But as you go lower into the rural and the really the tier 4 areas, I think that is where really the inclusiveness comes in also. And that's a very large push by the regulator to say, how do you go back and make sure that by 2047, every person in the country is covered, right? So a lot of initiatives there. So there are various ways to reach out to that segment. But when you get into the rural, right? So, and typically, you want to be able to go back and assess the risk, as well as service the claims, as well as connect with the customer. And that gets difficult as you get deeper into the geographies. So the way to look at it is whether we have group products, right?
Okay.
Because it's very easy, so you don't have to go back and assess at an individual level.
Okay.
But you have, let's say, something around microfinance loans, wrapped around microfinance loans.
Right.
You look at smaller loans where you have credit protect, which you are able to bundle around. So whenever somebody takes a loan, you have that in place. The regulator is taking huge steps on the Bima. Bima Sugam is what's the online platform, but that may still not fully reach the tier 4, right?
Totally.
But they are taking a lot of good steps in terms of Bima Vistar and Bima Vahak, where they're actually saying that every gram panchayat in our country needs to be covered, right? Okay. And we need to have insurance companies which own certain gram panchayats and make sure that they are penetrated in and everybody there gets in. Okay. But there, when you have group products, when you have your presence there, you may be able to cover many of these. But we really need to think differently and innovatively. Frankly, if you have to go back into the real end customer in India.
Exactly. Yeah. Do they have the understanding? Do they really understand the relevance of having these kind of products as well in tier 4 specifically?
Yeah. So there, what happens is it's a question of affordability. So even the little premium that they pay, they wonder, what will come back because they have other requirements in mind. So maybe, somewhere we have to think differently to say that, look, how do we bundle a PMJJBY with, let's say, a direct benefit transfer, right? Where you are going back to these customers, and there's a huge base of customers who are getting this benefit. How do we go back and say that, look, the PMJJBY is inbuilt into it? And then what happens is this negative selection which happens in the industry. Because if you were to go out, only the people who are unwell will probably come back. And that's the risk which, you don't want the insurance companies. So whether you look at CSR, whether you look at mandating, whether you look at inbuilt program, those are the kind of design that we believe, over a period of time will help us get into the tier 4. Tier 2, tier 3, lot of work in terms of small ticket size products, looking at how do we go back and service these customers. So there's a lot of work which is happening, and we do see a lot of growth happening. In fact, even for us at HDFC Life last year, almost 65% of our business actually came in from tier 2, tier 3. So that shows that the market is expanding.
Given the fact that the regulator is doing a lot, the stakeholders are, playing their important role. What, according to you, or how, according to you, Insurance Awareness Day and the kind of initiative HDFC Life has taken up, Bridge the Gap? I think this is the theme this year that we are focusing on. How impactful and do you think this is going to be, and what kind of a change would you like to see as one of the stakeholders?
This is a good question, and I'll tell you why we came across building these themes around the insurance awareness. So like I mentioned, really it's not awareness which is so much of a problem, it's more the inertia, right? Life insurance as a product is a long-term product, and like many other financial products, it's a question of trust, right? And really it is about transparency of the product. It's really about making sure that there is a suitability of the product that we sell, right? And I think the idea behind this whole Insurance Awareness Day is to go back and not only talk about financial literacy, but also talk about awareness about, what are concepts like insurance benefits that you get, what is it the claim settlement process is happening, what is the insurance interest which is there in place, what is assignment, what is nomination. So over a period of time, as customers understand more and more, they have this ability to say that, okay, I will go out and buy a life insurance product. Unfortunately, in our country, we keep delaying this, right? And true for each one of us. And I'm sure you run this program. It's not a very interesting program to hear about mortality, morbidity, longevity. I mean, you at one end, you'll probably watch a World Cup match, and the other end, you want to spend time to figure out what is it that you want to do in terms of covering the protection gap. And you somehow tend to feel that it's okay, life is going on, and we will do it later. The question is whether we're doing it now. Right? We saw the impact of it during COVID, and as an industry, I mean, I think in the first year of COVID, there was almost 60,000 crores of claims paid out. In the next year, it was almost 40,000 crores of claims paid out. But really, the essence is not in terms of the claims paid out. I think the number of families that we also touched. See, one is the negative way to think about it, to say that, this is the claim we paid out and the families would have got affected. But on a positive side, look at the number of families who didn't go one step back. The children went to school, the businesses did not suffer. I think for everybody here, the insurance awareness is about understanding that what impact will happen if you are not to have got it in time. So really, insurance awareness is at our end is to do two things. One is to make sure that we build transparency and suitability. The two is to say that, look, it's accessible, there are good solutions which are available. 3, the time is now, and 4 is about how do we make sure that the whole country is looking at least 1 or 2 insurance products and in line with what the regulator wants.
One last question to you, because we are looking at 2047 as insurance for all. You, HDFC Life, what are the most important steps, first 5 important steps towards this particular vision? What are those?
Obviously, we are completely right, and we are among the largest players in the insurance industry, and the brand helps us. But again, if I were to look at it, there are 4 key steps on how do we make sure that life insurance happens. The first is to build actually a great value proposition, right? And I think the amount of time we spend in terms of looking at what is a product that we would want to go out to the customer, right? I think we spend a lot of time. For many years, we won Product of the Year awards. But really the essence is, if you were to come out with the product, is it something that you would buy yourself? Is it something that you would recommend to your family, friends, relatives? Because once you have that product, then it's easy to go out and say, look, it makes sense to buy this product. So that's the first step, that you've created the. The second step, of course, is to create the awareness and consideration. Right? And it's important, like I said, because a lot of people know about it, but don't take that step to actually sign and buy a policy. But whether it's the Sarutake Geo, whether it's a bounce back campaign, all this is important for the customer to say that, look, there is a great product and we are aware that HDFC Life is there. The third is ease of access, right? In terms of how do we make sure that they find it easy to buy. So really a huge amount of effort in terms of building distribution. We are expanding our branches. We are setting up some 140 branches. We are going into tier 2, tier 3. We have partnered with like 300 banks and NBFCs so that we are able to. We have more than 200,000 financial consultant agents who are representing us. So now whether it's in terms of technology, whether it's in terms of ease of buying, which could be non-medical, which could be technology-based apps, whether it could be 3-click kind of products, all that is getting built in to make sure that the customer is able to buy. And the fourth and most important, which is, like I said, is core to insurance, is how do we service the customer well, right? Which is in primarily claims. So how good is your claim settlement? How less is your repudiation of a claim? Because really what you want is that, look, if something happens to you, your family should not be running around looking for the claim. I think those are the 4 things that we are looking at consistently to make sure that it builds into a loop, right? I mean, you have a great product, you created awareness, it's easy to buy, and there's a word of mouth on servicing. So if you continue to do that, and we've been doing that consistently, and we aim to do that consistently. But that's what I think will build insurance penetration around it.
Sure. I think with that it's a wrap, and wish you all the best for all your initiatives and the steps taken ahead to achieve insurance for all and the kind of awareness and the target that you have put up for your HDFC Life. But then thank you so much for being on the show and helping our viewers decode all the aspects of having the right kind of life insurance today. Thank you.
Gula. Thank you.
And for our audience, I hope we have helped you understand the importance and benefits of life insurance a bit better today. Do remember, it's never too late or too early to be thinking about life insurance. So do speak to your advisor and help more people initiate these conversations. Thank you so much for joining us today in Bridge the Gap, an initiative to bridge the gap between you and your secure future. See you next time.